Palantir stock. Palantir is the main subject of today's video, folks. It's about to get very, very serious in regards to Palantir. So I wanted to react to one video and one video only in this one here today, okay? We're going to speak about a situation in which Palantir stock could tank quite substantially, and it could be a huge buy the dip opportunity if certain things go a way here. And so I want to react to this one with these three gentlemen. It's obviously posted on Amit's channel, but this is the main gentleman that's going to talk here, and he has some interesting points, I thought, in regards to what Palantir should be doing with their business model right now, why this would tank the stock, but why it would actually be an exceptional opportunity for long-term investors, which I thought was an interesting standpoint. So I want to hear what he has to say, react to this one, kind of share my opinion on this. I might have a little bit of a different opinion, and we'll go from there. So I appreciate everybody joining me as always. Thanks so much for being subscribed, folks. We are now at a new all-time high subscriber count. I think we're 32,800 plus big on the channel now, so I appreciate every single person that subscribed to the channel. Now, if you guys didn't know, we're only hours away from Palantir's earnings now at this point in time, so it's about to get pretty wild. It's a busy week in general. This is the last super busy week for earnings, and then things slowly start to calm down after this week, essentially. So also, when this video is over today, make sure you guys get your free workshop down there. I put that together last week for you guys, how I find 10x stocks. About a 28 to 30 minute video there. Should get a lot of value out of that. It's absolutely free to access it. It's a pinned comment down there for access, okay? Alrighty, guys, let's get into this. By the way, I might make a guest appearance on Amit's channel at some point this coming week. We shall see.
So what tells you that the business is actually healthy? So the fact that operationally speaking, even including the stock-based compensation, basically the business of Palantir is able to sustain its business without the need of raising capital. It means that the unit economics of the business actually work well. Now, I think we need to think a little bit in terms of game theory. What if you were Karp? How would you manage the company right now? Because one thing that
you got my attention when you started talking about game theory. I said, what are we talking about here? Okay.
I keep asking myself is, let's say Palantir is able to squeeze more revenue from the customers right now. You have more free cash flow. Okay, fine. What do you actually do with that free cash flow? Giving it to shareholders doesn't make no sense now. You keep piling up the cash. That is great, helps your business risk-free. So, but at the end of the day, that would not really change the core question of the company.
Okay, before we go further here, okay, and I'm going to hear he's going to speak in depth about his point here. But my initial thoughts on this are, I don't agree. In terms of, you know, if you make more cash flow now, it doesn't matter, okay? I think it matters substantially. One, obviously, it de-risks your business if you just stack the money on the sideline. It's, you know, one of the promising things about Palantir, one of the reasons I bought into Palantir was not just the product, not just, you know, what I think the business model can be over time, right? But one of the reasons I became a shareholder of Palantir is I looked at the valuation very low, and I looked at that cash stack they have of over $2 billion plus in no debt, and I said, this looks like a, you know, a pretty extraordinary opportunity when I have this sort of a business model that I think I have here, right? And so to say, well, it doesn't matter if they stack to $3 billion, $4 billion, $5 billion of cash, I just disagree with that. I think it's absolutely extremely valuable, right? Another thing that the cash could be used for, instead of just stacking, is you could buy back shares. If you believe Palantir is a company that is eventually going to become a multi-$100 billion company, right? Or some people believe it's going to be a $500 billion company someday, or larger, right? If you truly believe that, then the best thing the company can actually do with its cash in the short term, just excess money that's around, right, is you can utilize that money to buy back shares at extremely discounted prices, right? Like if you can buy shares at a market cap valuation in the 30s of billions or 40 billion or something like that, if you really believe this is going to be a 250 billion or 500 billion dollar company, I mean, my gosh, like you're stealing, you know, shares essentially. Like, I mean, that, and what that's going to do for EPS long term is going to be massive if you could take a huge chunk of shares off the market now, right? So I think from those two factors, and then the third factor is, well, actually there's four factors. The third factor is you could use that money, obviously, to continue to hire top tier talent and, you know, steal away potential great future employees from other big tech companies, right? Which, from what I've heard, Palantir has the best of best workforce you can possibly imagine out there. That's another thing. And the fourth part is, if Palantir sees any other softwares or capabilities, little tuck-in acquisitions that it can make here and there to plug into the business to help them grow even better, even faster, then makes sense also for anything that they think they can't build themselves, or it just helps accelerate their path forward. So my thought of just, you make, more money now, it doesn't mean anything. I disagree with that as a fundamental investor, as somebody that, got brought up into the stock market from the value world. And as somebody that's seen big tech companies grow to be giants, and their cash stacks helped them immensely get there because of the way they were able to invest back in their businesses and buy back shares, which helped the valuation of the company immensely long term.
Let's say if you squeeze 10% more from your existing customers, meaning that you have 10% more just for the price increase in terms of revenues. So you have organic growth plus the price increase. Let's say you reach 20%. Does that change to you very much? Okay, you have more free cash flow. But again, what do you do with that free cash flow? I think given the setting, if I were Karp, and I think of the most important thing is not to show growth now, but to be sure that in 10 years from now, I solve the monopoly question. And in order to be sure that I solve that monopoly question, I would not give an F to the current revenue growth. I would only focus on we need to unlock the value of our customers. So our customers need to, in 10 years from now, they need to have not 50 million on average, they need to have 200 million per customers, because these existing customers need to have a foundry even when the employee go to the bathroom. If that happens, you don't really care of the current revenue growth in 1 year, 2 years. You only care in 10 years, the existing customers have a foundry full stack in whatever thing they do. Because if that happens...
So I agree with this gentleman in regards to, obviously, it's super important for Palantir to be able to attract as many customers as possible and then keep those customers around as long as possible, and the business is going to be as sticky as it possibly can, right? And obviously, if you have a great product, you can go up on price on your customers over, future years and those sorts of things. So I do agree with him in regards to that, but obviously the way Palantir does a lot of their contracts, many of these contracts last several years, so they could sign a deal with a company for 3 years, 5 years, 7 years.
Then you have the monopoly unlocked, which gives you the pricing power to basically raise prices 10% every year, and the customer will just say, okay, I have no choice.
And the street will sell it off, which will be the greatest dip for us.
Oh, yeah.
Right? Because if the revenue is not good, as you're saying, if Karp's intention is to not make revenue growth good, the street's going to be like, all right, screw you guys.
So that's exactly the setting with which I'm trying to look at it. If things go in the normal direction, okay, fine. But there could be a huge opportunity, in my opinion, if we would see the company just growing little in terms of revenues, because we don't know, that's the interesting and also the challenging thing, that maybe a 13% growth, 15% growth is actually extremely good, because what Karp is doing is, rather than selling you one product for 100, I'll give you 5 products for 150. In terms of growth, that's very little. But if you have that 5 products, that actually help the company grow even faster with its use of foundry, which means that in 5 years from now, 10 years from now, when basically you are completely reliant on that, then the customer can't move and you can charge him whatever you want. So
right.
There could be the case, as I made last year, where I said, there could be the case where the customer count increases and the cost go up, killing the profitability. That would be an opportunity for investors. I see a similar setting, but now with not on the cost as it was last year, because we were starting from 30% growth free cash flow margin that went to 20%. My ideal case right now, that the gap profitability question has been solved, is seeing the revenues growing very little, but the number of customers exploding, having some hints, like with the press releases that we keep having, like West Truck last day, after 2 years, a further expansion. If we have the hint that the revenue...
So, this gentleman's main point, obviously, and we'll hear the remainder of it, but his main point is really around Palantir charging cheaper prices up front to attract as many customers as possible, and then you'll be able to go up on those prices every, year, he says in this example, right? Which doesn't always work that way, especially the way these contracts are done. So what he described there, in my personal opinion, it's not really that attractive to a Palantir type company. Remember who Palantir is selling to. Palantir is selling to the government. Palantir is selling to huge corporations and maybe let's call it some mid-sized companies, right? Palantir is not really selling to small businesses. Now, what he just described there, in my personal opinion, is a more valuable approach if you're selling to small businesses specifically, okay? If you're selling to a small business that's, growing, but they're very small, maybe revenues less than $100,000 a year, certainly less than $1 million a year, those are great companies to sell to these entry-level products, and then hopefully you can go up $10 a year on them and things like that, right? That's beautiful. Palantir's not doing that. Palantir's doing contracts that are many times millions of dollars, but many times tens of millions of dollars plus, right? And so to those sorts of clients, an extra 10% is probably not going to make or break them, just as this gentleman just pointed out that you could easily go up 10% on them a year, right? These companies really are focused on, is Palantir going to save my business $250 million over the next 10 years if I use it? And does Palantir's product only going to cost me $100 million? That's what these companies are focused on. Does the math correlate, right? Can Palantir's product help me make an extra blah, blah, blah revenue, right? Can this cut down on our employee expense by running our business much more efficiently? Like, these are the sorts of problems, and, running the numbers and saying, okay, Palantir's product costs me this. It's going to likely, get me this sort of result, and this makes sense for me to grab this product, right? So that's my opinion on it. If Palantir was very, his approach that he's really taking there is like Palantir's for all companies, all businesses. And it's never seemed like Karp really wants to go that place. It never seems like the team really wants to go that place, right? And we don't have to go that place. Palantir doesn't need to have, 100 million businesses signed up for Palantir's products or 200 million businesses signed up for Palantir's products. Palantir can be, one of the most incredible companies in the world and one of the most successful companies in the world with a fraction of that amount of actual companies using them. Like a fraction, like a very small amount, okay? Palantir doesn't need to have everybody be their customers. When you're locking in $10 million deals, $30 million deals, $50 million deals, $100 million deals, you don't need everybody to be your customer. And that's perfectly fine. Everybody doesn't have to be your customer. And you can still be an absolutely epic success. And you can still build into a company that could be a $100 billion market cap, multi-$100 billion market cap, right? So, when you're talking about, it's no different than, the way I look at it, this is the way I'll put it, okay? This is the way I put it. This should put it perfectly for everybody forever, okay? Palantir is trying to be the Louis Vuitton, we can call it, of, if you want to put them in the SaaS category or the data category, whatever category you want to put them in, right? I always say they're at the perfect cross sections of data and artificial intelligence, and you being able to use your data as a company, as an organization, much better, much more efficiently, in a much higher level than you could before, right? Louis Vuitton doesn't need to sell to everybody. Walmart does need to sell to everybody, right? Palantir doesn't need to be Walmart. Palantir needs to be Louis Vuitton. Louis Vuitton's built into this gigantic corporation by selling to a very small amount of individuals that can actually afford that. And yet they built one of the most incredible businesses in the entire world based upon that premise, right? And so that's what I look at a company like Palantir, and I kind of say, if Palantir's to actually look out there somewhere and try to see, like, who do we want to be? I think it's Louis Vuitton. That's who you want to be. You want to be seen as, we're the premier. We're the best. You're a big growing company, and you want the best. You want the best results. You want the best quality product. You go to Palantir. You want lower stuff. You go to Coach. You go to Kate Spade. I own Tapestry. Okay, I own Coach. Right? You go to Michael Kors. You go somewhere like that, right? Or you buy the handbag from Target, or you buy the handbag from Walmart, or whatever, right? Or Amazon. That's perfectly fine. It's just Palantir doesn't need everybody to be their customers. That's just the bottom line with that. They don't need everybody. They need a very small amount of customers. But as long as a huge portion of those customers are the type of customers that are going to spend millions of dollars on your software a year, tens of millions of dollars on your software a year, or potentially $100 million plus, that's where we're talking the big money's at. And that's where we're talking about crazy profitability long term for the business model.
Grow very little. The market hates it, but we have the customer count exploding, basically confirming that the company is de facto dumping the product. They can't give it for free completely because that's illegal, but you can make a good deal for the customer.
Yeah, the other issue you run into, if your customer count's skyrocketing but your revenue's not, then it looks like you must not have a very valuable product. You must not have a very good sales team. If you can't get people to pay a nice price for this product that's supposed to be so amazing, well, why aren't people paying the price for that product? Then you could kind of get into that debate, right?
That to me would be the biggest opportunity because that would kill the price, but intrinsically we would know that that is the perception that is wrong. It is not the reality. It's not similar, not different from what we saw with Wood. The market focused on one metric that is very important, like the monthly active users. But if you focus on that and you don't grasp the full picture, you would think, okay, Robinhood sucks. But the reality is the company has been doing the right thing. The company has become GAAP profitable even in a very adverse situation like Palantir, which means that when the conditions finally align, if you're already GAAP profitable in the worst condition, at the good conditions, you start printing money hard. So that's the setting I'm seeing.
Yeah, I hope everyone heard what you just said correctly, because I've been thinking about that for a while. If customer count explodes and revenue declines and the street sells it off, that is when you buy the fucking dip. Because we could have a dip where you're not supposed to buy it because it's not justified to buy it because all the metrics.
Man, you're trying to get me demonetized here, man. Come on. Don't you know I react to your channel sometimes, man? I'm trying not to have any F-bombs on here. So, yeah, at the end of the day, my opinion is my opinion, okay? Palantir needs to be Louis Vuitton. Palantir doesn't need to be Walmart. It's my personal opinion. That's my personal approach. At the end of the day, Palantir product is that great. It's going to be extremely sticky over the next 5, 10, 15, 20 years. And they will be able to go up on customer contracts over future years because it proves out to be that special, right? So appreciate everybody joining me as always. Thanks so much for being here, folks. It's going to be a fun next 24 hours in regards to Palantir. I'll keep you guys obviously up to date on everything going on here. Also, make sure you get that free workshop for you guys. That's pinned comment down there for free access to that. And once again, it's probably about a 30-minute video. You get a lot of value out of that one. Much love and have a great day.